Good morning. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first, let's kick off with our banner story. The country's export performance remains below economies in East Asia that are leading global trade recovery. This is according to a report by the United Nations Conference on Trade and Development, which showed that economies like China, Taiwan, Korea, as well as Vietnam posted global market share gains in exports. The report found that most manufacturing sectors rebounded in the fourth quarter of last year. The report showed the Philippines' score at 0.41 in export performance, China, meanwhile, scoring 0.56, South Korea at 0.43, Vietnam at 0.63, and Thailand at 0.42. Now, a higher score indicates above average performance. The UN body also said the pandemic impacted the relative competitiveness of the countries. For instance, China gained competitiveness in chemicals, metals, textiles, and pharmaceuticals, among others. On the other hand, the Philippines lost competitiveness in machineries, which is one of our top export sectors. That declined by 7% during the 11-month period last year, whereas goods exports fell 10%. Meanwhile, data from the Bangko Sentral show that foreign direct investments net inflow dropped by 16.5% to $537 million in November of 2020. Okay, guys, it's the last trading day of the shortened trading week. Others have actually begun celebrating the Lunar New Year already. You've got China, Japan, and South Korea, for instance, closed this morning. Now, here in the Philippines, all eyes are awaiting that Bangko Sentral decision today. Of course, there's always a chance of a surprise. It's even despite the fact that you've got all 19 economists surveyed by Bloomberg expecting the key interest rate to stay at 2%. I recall this follows or echoes what Governor Ben Diokno of the Bangko Sentral said would be a long pause on that interest rate front. He said that interest rates were likely to remain at this level for at least 2 more quarters. This despite, of course, inflation having hit the fastest pace in 2 years on January. Now, you can see on my terminal here how we are opening a bit of a down trend. You're going to be seeing us opening just a little bit above 7,070, down by 0.13% this morning. Now, I wanted to focus on a couple of key sectors here, especially as we're on interest rate watch. First of all, the financial space. You've actually got the BSP or the Bangko Sentral being accommodative, using other tools, in fact. So first of all, they've now also extended their zero spread on rediscounted loans. Now recall that this had already been extended last year. That is now extended all the way until April 30th. This allows banks to now tap that facility to meet their temporary liquidity needs. Now, rediscounting is basically a facility, a credit facility that allows the banks to refinance the loans that they're extending to their clients using the eligible papers of other end user borrowers. Now, another thing, especially for retail investors right now, it's easier to get a trust account, at least if you've got at least 100,000 pesos. So this is with the BSP cutting the minimum amount that is needed to open an IMA, that's an investment management account. It used to be 1 million pesos to be able to have this account, and now it's 100,000 pesos. And what can you do here? This also goes for commingled funds. You can invest in exchange-traded equities, fixed income, and other SEC commercial papers. Corporate accounts can also participate in that. According to Diokno, more changes when it comes to trust regulations are now in the pipeline. Now, let's take a quick peek at the property space, especially since a lot of eyes are going to be on this, amid that rate decision or non-decision, depending on what will be happening. Let's take a quick peek at how properties are performing, down by 0.6% this morning, possibly the one really dragging the bourse towards the downside here. And a couple of things to be watching out for here. 89.90, first of all, that's trading flat at the open. They have just said that they have listed 3.7 billion pesos worth of preferred shares. The bell ringing ceremony was actually on site at the stock exchange. And the listing was in fact virtual. Now, another one that's also still confident of their prospects amid the pandemic, that is Santa Lucia Land. I recall that that had slid for a couple of days after the PSE had announced that they would be taken out of the property index. This according to their executive vice president and chief financial risk officer, David de la Cruz. Even with the decline in the GDP and contraction of property activity overall, the company displayed reliance. In fact, the third quarter net income was up by 16.5% to 1.3 billion pesos. So very interesting sector to be watching out for today. Now, guys, let's take a step back and get an outsider perspective on the Philippine economy vis-a-vis the rest of the Asian region. We have with us this morning Dr. Stephen Cochrane. He is the Chief Asia Pacific Economist over at Moody's. Good morning, sir, and welcome to the broadcast.
Good morning.
Let's kick off with fiscal prudence plan of the government. So much contention when it comes to that. You've actually got, many economists and analysts saying that we could have done better in terms of recovery if we had had a bigger fiscal package. They're comparing that to the other packages in the rest of the world. But on the other hand, you've got, for instance, the Secretary of Finance saying that we're fine this way. There doesn't need to be more stimulus for the time being. Tell us, could we have gotten bigger stimulus without getting knee-deep into debt, without compromising our ratings? Would that have been the better way to go?
Well, there's a couple of ways to look at this. First of all is that the Philippines economy is digging itself out of a deeper hole than most regional economies. If you look at where the economy went last year and in the first half of the year, it contracted by almost 20%. I mean, that was huge. The only country across the broader Asia-Pacific region that did worse was India. And so one could argue very clearly that there was an initial need for a very, very strong response from fiscal stimulus to support small enterprises, to support the households that had lost jobs or that income is very, very weak, and to support the industries that are hurt by the pandemic. And I would argue that the Philippines still has a ways to go, and that fiscal policy still has a very, very important role to play. If you look at debt in the Philippines, either sovereign debt or overall debt, including corporate debt and household debt and such, the debt to GDP ratio is right about in the middle of the pack in terms of comparing it with other emerging market economies. It's not extraordinary, which tells me that there is some space here for further spending if that were the path that were to be taken.
Okay, so we do have some fiscal space here. I mean, in terms of still tapping on the debt to GDP ratio, it's still there's still room to go. But do you feel that despite the falling tax collections here, despite the fact we've just reported in our banner, our exports are slumping, our FDIs are slumping, are we going to be able to fund that increased debt if this is the recovery path of the economy?
Yeah, well, I think, again, the thing to remember is that the economy is recovering. It's slow. Third quarter, fourth quarter last year, which is what most of the data reflects now, was a pretty slow pace of turnaround. But there should be some acceleration this year and next year. I do expect that we may see growth somewhere 5.5% to 6% or something this year. It will be, in a sense, slow, though, for the economy to regain all the lost ground that it lost. I mean, it may be the middle of next year, if we use GDP as the measure, that GDP gets back to where it was prior to COVID. So it's going to be we've got a ways to go, and I think it's going to be important to provide some support during the next year to make sure that recovery continues.
Can we still rely on the things that we previously relied on? We're very service sector, driven in this economy, and that has significantly been halted when you're unable to deliver services in a lockdown. We're also highly reliant on consumption. That's around 70% of GDP. And again, when retail spaces are closed and 35% of the economy is still locked down. The seniors, for instance, the children below 15. Mm-hmm. Is this, enough for you to say that even if it's going to be slow, we can still be relying on these sort of, footholds, mm-hmm. So to speak?
Yeah, you make a good point about consumption. In fact, Last year, when the economy was in recession, consumption spending fell to a greater extent than the broader economy. That was really tough on the Philippine economy. And consumption will rebound, but it will only rebound as jobs, employment, and income come back. That, and again, sort of, in a sense, goes back to the need for some stimulus. But I think you bring up a good point that there is, this is a time to be thinking about finding new drivers of economic growth. So, for example, right now, the most important driver of growth in the global economy is trade in goods. It's not the service economy, it is the goods producing economy. And that's when you look at China, Vietnam, Korea. These are the countries that are so closely tied into the production supply chains around the world, and they've done very, very well. Partly also, too, because fiscal policy in those countries supported liquidity for manufacturers, kept them going, allowed them to open up very, very quickly. Now, it doesn't mean that Philippines has to match, China's capability of manufacturing, but the more that the Philippines can get all of the infrastructure programs back on track that were in place, the Build program prior to COVID, to improve capacity at ports, to improve capacity in terms of access through logistics and such to manufacturing, so much the better, and to play on the strengths of the Philippines, which is on the service side, working in terms of the digitization, if you will, of many industries, both domestic and export-oriented. There's a lot of high-tech service industries in the Philippines that could be expanded and used to drive the economy as well, whether it be production of tech goods, software, services, those kinds of things. Philippines has a very good comparative advantage there.
Okay, let's move over to monetary policy. Is this lag in loan growth, despite the fact that we're now at record low interest rates? Probably we're even in real negative rate territory now with the inflation going up. Is this a global phenomenon, in that there's a lot of risk aversion by the banks? There's a lot of the loan growth hasn't picked up, or is this Philippines specific?
No, actually, this is seen across the Asia-Pacific region in particular, particularly because there's an expectation that non-performing loans, or the number of non-performing loans, is going to rise going forward, and banks have to be ready to cover those, to allocate capital to cover non-performing loans. This is an area where policymakers need to work very carefully with the banks to allow them to lend and still manage those capital requirements. It also, I think, goes to the fact that so much of the economy that is hurt are smaller enterprises that have difficulty acquiring loans. Even if they go to a bank, they don't have good records of their financial performance. And in this economy, very few records look very good. So banks even have a harder time in terms of judging loan applications. And so there's this natural conservative bent in terms of actually expanding the book.
Okay, so there's a lag there, at least not just for the Philippine economy, but the rest of Asia as well, as banks start to become more risk averse. And finally, Stephen, just on the COVID and the vaccine story, I mean, there was a lot of contention on how we had managed the lockdown, at least in the first few months of pandemic, as everywhere else. Do you now see that there's a silver lining to all of this? See that the vaccine procurement story has improved, that the figures in terms of COVID cases are markedly improving, and you can say that we're on the right track?
They are improving. I would say they're still kind of high, and the path on the downward path has been a little inconsistent. There was an uptick after the Christmas holidays, kind of to be expected. Now they seem to be back down again. The thing I was worried about was initially the slow pace of procurement of the vaccine in the Philippines. Because this is going to be critical in terms of pulling the economy out of its current slump. There have been some improvements, though. The latest data that I've seen is that the government now has procurement agreements for enough doses to administer to something about 45 to 50% of the population, something like that. It's not enough, but it's improved a lot over the last month. And if the government can continue to improve in terms of the availability of vaccine, then they should be able to reach what is a generally considered goal of 75 to 80% of the population to acquire some kind of a herd immunity. So there's still some work to go in terms of acquiring those, but at least that is going in the right direction, and I'm less pessimistic today than I was, say, a month ago when those numbers did not look nearly so good.
Okay, so less pessimism is still something to be celebrated these days. Thank you so much for those insights. That was, of course, Steve Cochrane of Moody's. Checking in on the other headlines, we're keeping our eyes on. The Senate is likely to follow the House of Representatives in passing a measure taxing foreign POGO workers. Senate President pro tempore Ralph Recto says the government needs all the revenues it can collect from that industry. So Recto personally filed a bill imposing a 30% tax rate on the POGO industry. The proposed measure also seeks to impose a franchise tax equivalent to 5% of gross receipts that's derived from offshore gaming operations. This comes after the lower chamber on Monday approved House Bill 5777, amending the tax code to include persons engaged in POGOs. The bill will require foreigners employed by local POGO operators to pay a final withholding tax that's equivalent to 25% of their income. Recto says he is confident that both chambers of Congress can reconcile the respective versions of the POGO tax bill. The Philippines could sustainably benefit from the ongoing massive shift in global trade. That is according to the Asian Development Bank, which sees the service sector likely to benefit the most out of this new globalization. The ADB says Asia should adopt stronger trade liberalization and facilitation efforts so it can take advantage of economies that are realigning supply chain networks. This is while COVID-19 lockdowns are disrupting global economy and trade. ADB's Economic Research and Regional Cooperation Director, Sin Young Park, said the Philippines has a strong potential given that its post-pandemic trade will focus more on the digital and services sectors. This means that after the pandemic, Park anticipates Filipinos to take on more service-oriented roles abroad while the local BPO sector remains intact. The global lender noted that cross-border migration took a huge blow last year, but the pandemic's impact on remittances remained relatively stable. And that's a first look into the business day. Today's Thursday, February 11, 2021. Catch Business World live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel, and we are One News.